Welcome. Here is the fertilizer market report for February 28th, 2024. In this week's fertilizer report, we'll talk about excerpts from Nutrien and Mosaic's outlook, hedge fund activity in ag complex, North American urea and MAP prices, and industry tidbits. The news of the week is the outlook in Nutrien's Q4 earnings report. We expect nitrogen supply constraints to persist in 2024, including limited Russian ammonia exports, reduced European operating rates, and Chinese urea export restrictions. North American natural gas prices remain highly competitive compared to Europe and Asia, and we expect Henry Hub natural gas prices to average approximately $2.50 per MMBTU for the year. The U.S. nitrogen supply and demand balance is projected to be tight ahead of the spring application season, as nitrogen fertilizer net imports in the first half of the 2023-2024 fertilizer year were down an estimated 55% compared to the three-year average. Global industrial nitrogen demand remains a risk in 2024, as the industrial production has yet to rebound to historical levels, especially in Europe and Asia. Phosphate fertilizer markets have remained relatively strong in the first quarter of 2024, particularly in North America, where channel inventories were low entering the year. We expect Chinese phosphate exports to be similar to 2023 levels and tight stocks in India to support demand ahead of their key planting season. Again, these types of supply shocks support prices, which bolsters the argument for investing in Genesis fertilizers and owning your tons. Next, let's switch over to some excerpts from the outlook in Mosaic's Q4 earnings report. Global grain and oilseed markets are expected to remain tight in 2024. Crop production threatened by geopolitical unrest, weather extremes, and reduced fertilization is struggling to keep up with strong demand driven by secular demographic changes and growing consumption from renewable fuels. As a result, global stocks-to-use ratios for grains and oilseeds are expected to remain under pressure for the foreseeable future. Today's healthy agriculture backdrop and favorable economics will continue to incentivize growers to maximize yields and apply fertilizers. These demand factors are especially promising for the phosphate market, as they are expected to be matched by tight global supply well into 2024. China's exports are expected to remain capped as domestic agriculture and industrial demand is prioritized over fertilizer exports. Firm phosphate prices and low raw material prices suggest that stripping margins will stay elevated for the foreseeable future. In North America, after a long fall application season and solid winter fill activities, demand continues into the spring planting season. Brazil shipments are expected to remain solid in 2024 as barter ratio are favorable and growers need to replenish soil nutrients. In India, grower demand is strong and growers are waiting for higher government subsidy rates. Potash demand for North America is expected to remain robust in 2024, and demand in Southeast Asia and Brazil is expected to improve as the year progresses. Supply appears adequate to meet that demand in the near term. According to Peak Trading Research, hedge funds have liquidated long bets in agriculture futures and added to short positions in 13 of the past 15 weeks. These speculators are now the shortest they've been in 4.5 years this weekend. In our view, if there are any shocks that make these traders uneasy with positions, short covering will send ag commodity prices higher. A look at the North America urea prices last week. According to Green Markets, urea prices in Western Canada were flat week over week in a range of 720 to 765 Canadian dollars per metric ton delivered. Urea Western Canada prices have increased by 12% since December 2023. NOLA urea prices jumped around last week, according to Green Markets. The week started with prices falling to $330 to $345 per short ton freight on board for March tons, but rebounded at midweek to 350 to 355 freight on board for March, and 355 to 360 US dollars per short ton freight on board for February. Prices increased again later to a high of 365 to 366 US dollars per short ton freight on board for the first half of March business. A look at the North America phosphate market last week. According to Green Markets, the latest delivered MAP prices were flat week over week in Western Canada in a range of 1,120 to 1,130 Canadian dollars per metric ton. MAP prices have risen 38% since early July 2023 in Western Canada. MAP NOLA prices were up to a range of 605 to 625 US dollars per short ton from the previous week's 600 to 615 US dollars per short ton. Thank you for joining us in this edition of the Fertilizer Market Report. We hope these insights prove valuable to your understanding of the current trends and developments in the agriculture and fertilizer industry. The Genesis Fertilizers Market Report is not intended as financial advice. Please visit us at www.genesisfertilizers.com/news for our complete market report and links to articles mentioned in this report. Stay tuned for more updates and feel free to reach out with any questions or comments.